The S&P futures hit our 4100 target that we called for early in the week, and our 100K challenge crosses over 20,000 for the first time. This is Invest with Jacob. Hey guys, welcome to the show. My name is Jacob Gabbard. This is Invest with Jacob. The big news of the day is we hit the 4100 target that I've been calling out all week, that I told you we were headed for. Last night in the futures, the overnight, it poked up to 410250, and then it kind of hit its head and came back down out of there. And if you're following my Facebook page, you saw that at the close yesterday, I said that we would probably push up in there, hit our head, and then bounce around and maybe even pull back today. So that's what we're looking at as we look at the market today. Now, you might be asking, how do we get to that price? So let's jump in and look how we got our 4100 target that we hit. We've been calling for it all week. It got here, and we did really well on our challenge with it. So let's jump in and take a look at how we got here. So you can see we moved up here, and today we just poked up and through just barely into our pivot here at 4100, and then kind of pulled back down out of it. As I'm recording this at 8:02 p.m. on Thursday night, we will see what the futures do overnight. My guess is they will kind of bounce around here, maybe come back a little bit and to the top of this candle, like the 4090 region, and close this week with not much gain or loss tomorrow, because it is an options expiring Friday. And we know that they like to burn that option premium by going sideways instead of up or down. So how did we get this pivot? Well, we ran a bunch of fib numbers off of our chart here. If we zoom out a little bit. So we ran a bunch of fib numbers that gave us a lot of confluence in this area. And what confluence is, if you don't know what confluence is, think of it like a beaver dam. Okay, so if you have one beaver bring one stick to the river and put the stick in, the river's just going to take the stick and blow right through it and keep going, right? If you have a beaver bring a tree to a river, well, that's going to cause a little more of a headache for the water to get around, but it'll probably get around pretty quickly. But if you have a whole bunch of beavers bring trees to the river and stack them up, well, now you got a dam and the river stops and you create a lake, right? So that's what confluence is. We have a whole bunch of pivot points right here in this major market pivot, and that creates essentially like a dam. And getting through that dam is very hard the first time you do it because of the resistance level. So we come up here, we're going to hit our head probably, I would guess a few times. If it blows right through, then we're in for something crazy. I just don't see that happening. But we're going to hit our head here a couple times, kind of bounce back and forth before we finally build up enough pressure to blow through that dam and go. Now, why is that important? Well, once you get over the dam and back into this way, right? If you turn around and look at the dam, if you want to go back the other way, you got to get back through that dam. So once we blow up into the major market pivot, that becomes a huge support line right here for us for our wave 4 when we're coming down out of wave 3. So that's why this is an important area. That's why we called for this target. That's why we felt like this target would be hit. And we did really well this week because of that. So the second thing we talked about was my 100K challenge. And if you don't know what that is, I am trying to take $6,000 and turn it into $100,000 using Elliott Wave to invest in the SP 500, which is what these videos are about. So I'm showing you what our targets are, where we're at, and how we're getting those targets. So right now, we're going to pull up our account because we hit a milestone today, and milestones are awesome. We started this on March 23rd, so just 2 weeks ago, and you can see over here, our live account value is $21,650, up from $6,000 in just 2 weeks. So in 2 weeks, we've had a year-to-date gain of $15,673, which puts us at the 21,000. So 6,000 plus that is 21,000. Our current trade that we have that's active, okay, we bought April 21st calls. So those expire in 9 days on April 21st, 9 trading days, I should say, on April 21st. And we will probably look to get rid of them tomorrow, I'm guessing, depending on what the market does. But if it just kind of bounces around, I'm looking for some consolidation, and that'll result in premium burn for me, and this number will come down. So I don't really want to do that because we're getting close to expiration anyway. So what we're going to do is we're going to watch the market tomorrow and most likely exit this trade because we hit our target. Our target was 4,100. And once we exit that trade, we will wait for the market to push up through the pivot. Okay, so we're going to go back over here. So here's the major market pivot. We're going to wait, okay, for it to consolidate over here, just kind of bang its head around, and then drive up through into the major market pivot. And once we get in here, we zoom out just a little bit. Our next target is wave 3, okay? And And our next target is 4,400, and we're thinking that's going to be this summer, probably around June. So we want to get in here because now we're going to be at like 4,150 or so, and we're going to look for maybe a little pullback to the support line, and we're going to load up here because we have tons of support here. Remember the dam, we look around, we look back, and there it is, helping us. It's holding us up. We can't get through it, so we got to go forward. Okay, so we got this support line, and this is how we construct a trade. We blow up into this through this resistance line, and then that resistance becomes support. And so what we're looking at is when we get up here, let's say it's 4,150 or so, we've got a 50-point drop to the support line versus our low end target for wave 3 is 4,400. So if we have 4,400 on the upside, that's what, 250 points up versus 50 points down. So it's a 5-to-1 risk reward. If we hit our target up here, we make 250 points, or we're actually trading the SPY, which we're going to talk about today a little bit. So we're going to make 25 points because it's 10% versus a 5-point drop down to our support if it blows through that. So we have a risk reward of 5-to-1 or 25-to-5. So it's a really, really excellent trade. It's a high risk or a high reward, low risk trade, and it presents us an awesome buying opportunity. So that's how we construct our trades. We hit the target. We know that we're going to consolidate around that target when we get through the target. We come back. We know we have support under us now. So we want to construct our trade to hit the next target with the support under us so we can have the most profitable trades possible, right? That's how we get 3.5 times our money on an options trade. I talk about a few different things here, and I want to make sure you guys are understanding what I'm talking about. So there's 3 instruments that we use when talking about the S&P 500. The first one is the SPX. You can see it over here. It's at 4097.18. Okay, that is just the index. You can't trade it. You can't do anything. That is just the value of the index, and it generally reflects what the futures are during regular trading hours within a few points because the futures are a little ahead, but it's generally right around what the future price is. So the SPX is just the index to let you know what the price is being traded at or what the value of the index is at during trading hours. The ES1 with the exclamation point here, these are futures. So these are traded every quarter with quarterly expirations, and they're traded 23 hours a day, I believe. I think they go from well, my time, they go from 3 p.m. to 2 p.m. the next day, and then they take an hour off where I live in Las Vegas, and the East Coast obviously do the math on the time change. But they're traded 23 hours a day, and they're a lot bigger, and that's why we don't trade them. The cost of a futures contract is $5,000, and that's just for one contract. And every point that you move is $5,000. So it's a very expensive way to trade. There's nothing wrong with it. It's just not something I'm doing because I have more affordable ways to get into the market and make a lot of money without having to put so much on the line. So that's the futures. But what the futures do a great job of is telling us overnight what the investor sentiment is, right? So right now we're looking live at the daily candle here, 17 hours left on this day. It's at 40.93.25, and it's actively trading right now. And this gives me an idea of what the investors are doing overnight. It gives me the overnight high, gives me the overnight low, and a lot of times those levels are really important for day traders because when you get an overnight low and the daytime actual trading hours comes down and matches that low and doesn't break through, it's generally a great buying opportunity for a day trade because if it can't break through the overnight low, then that's the low that's been set and you have support there. You usually bounce up and have a pretty good trade setup for that. So that's really important for day trading and just for the structure of the market and what we're looking for the next day. The reason I'm able to have an idea what the market's going to do the next day is because of what's going on in the futures. So that's the second thing, right? The SPX is the index, the ES is the futures, and then you have the SPY. And the SPY is just the ETF of the SPX. So it is essentially it's 10%. It's not exactly, as you can see, 408 and 4097, so it should be 4097 obviously, but it's not exactly 10%, but roughly it trades at 10% of the SPX, and it gives you a much more affordable option to get in and trade options, or just trade the SPY if you just want to buy it. You can buy it, and it's an index of it's the 500. You know, the S&P 500 is 500 stocks that are put together as an index, and a lot of people like to trade indexes because there's no chance of an index going to zero, right? If you had Enron a few years back, that famously was counterfeit fraud, that stock went to zero. So if you had all your money in Enron, you go to zero because it goes to zero. But if you have all your money in the S&P, there's 500 stocks in there, so it's highly unlikely that it's going to go to zero because 500 different stocks would have to go to zero. So that's why a lot of people like indexes, because it's a conglomerate of stocks that you can trade together, so that you aren't all tied into one thing, and it's simpler, and you usually get pretty good gains over the last, I forget what, I think it's 20 years. The S&P has averaged about 10% a year gains. So a lot of people like that. You get dividends on it. It's a easy way to trade. We use the SPY for calls, and we use Elliott Wave to set up those calls, and that's what I was just talking about, right? So we come up into the major market pivot, we get our price set, and then we put our option calls in for July or whatever we decide to put them in for, and we try to hit this target up here, and we have this support line down here. That gives us a great risk reward on our trade. So those are the instruments we use while trading. Hopefully that helps you understand more when I'm talking about each instrument and what we're doing with these trades. So guys, real quick, if you're getting any value out of this, if you're having a good time, if you're excited about hitting our target, hit that like button below, subscribe to the channel to make sure you get the videos every day so that you can find out what we're doing and how we're making money using the S&P 500, okay? So with that being said, tomorrow, again, I think we are going to hit our head on the major market pivot here. We're going to zoom in. I think we're going to bang around like right in this area here all the way across, for a while. And then probably not tomorrow, maybe Monday or Tuesday, break through into the pivot. If we do break through tomorrow into the pivot with a heavy move, then the market's ready to rip. But I don't see it doing that. I really see tomorrow being sideways consolidation, and then Monday or Tuesday, probably Tuesday of next week, just because it's not a options expiration day. But Monday or Tuesday of next week, seeing us move into this major market pivot and starting to establish our next trade. Okay. So the key takeaways, tomorrow we're going to be probably closing out our options from March. That will give us a nice start on our 100K challenge. We're going to sit and wait and be patient and wait for the market to set us up again for our next big high reward, low risk trade. And then we're going to grab a glass of bourbon and have a great weekend. Guys, don't forget to jump over to my Facebook page and like it and follow it so that you can get the during the market updates that I send out that tells you what to expect and what we're looking at for the market. Really appreciate you guys listening. Have a great weekend.